circumstances in which some investors who are trying to invest in property and they've got a blip in their credit rating. Now that blip in a credit rating could be something like a county court judgment or a default that's actually stemmed from a tenant not paying a bill and it passing on to the investor themselves. It could also be the odd missed payment from the investor themselves. It could be a fallout with a builder that's resulted in a county court judgment, or it could just be a lower credit score because of many mortgages and many transactions that are happening on a person's credit file. So how do you deal with this as a property investor, and what options are available to you? Well, first of all, if you've got a very good explanation for adverse credits, then there are lenders that will be sympathetic to that when they're considering lending to you for a mortgage. The first thing is whether they see it as what they call a life circumstance or a life event. So, for example, something significant that happens in a person's life that resulted in them maybe not concentrating on their credit profile, such as something major in life, like a divorce or something along those lines. But it could also be, let me say, a one-off event which is falling out with a builder, and that has resulted in that county court judgment. So under those circumstances, we can normally explain that situation, and some lenders will be happy with it. The same applies with different defaults. Where it's difficult is where a county court judgment or a default has come from the non-payment of other credit. In those circumstances, it would normally be a little bit further down the line. So if it was in the last couple of years, it gets quite difficult to get a competitive mortgage. But there are buy-to-let mortgages out there for those who've got a clean slate for at least a 12-month period. So if you had a default or something that was 13 months old, you, in those circumstances, are entirely mortgageable. Of course, as we've discussed, there's the circumstance where you might have the odd missed payment on your profile. Again, it's better that those are not recent, but if they are, it's still possible to be considered for a mortgage with the right lenders. The most important thing in these situations, or for that investor that's had lots of recent credit checks because you maybe have a big portfolio, is there are also lenders that don't credit score, although they credit search. What's the difference? Well, first of all, a lender that credit scores is adding up a score according to what they see on your credit profile. And that score will determine whether they're going to allow you to have a mortgage or not, whether you pass their DIP, their decision in principle, or their AIP, their acceptance in principle. However, there are also lenders that only do what they call a credit search. So they have no scoring system. They just have certain triggers that get them to manually look at your credit profile if something flags up. And that's a much better situation, because if you have a low score, or you've got the odd blip that's reduced your score on your credit profile, the lenders that will not credit score but will credit search can then take a sympathetic view on those circumstances, and we can provide an explanation. So if you have got the odd blip in your credit rating, it is not the end of the story for you. You can potentially get mortgages. We can help you to invest in property, refinance, and also continue to build your portfolio.
Looking to purchase a property for investment or development? Look no further. At Harvey Bose, we pride ourselves in finding ways to make complex and niche deals work. Making sure to explore all the possible strategies and matching the right financing structure to the needs of each investor. Contact Harvey Bose today. Property finance by investors, for investors.